afternoon, good evening, traders from across the globe, and welcome to the 833rd edition of Short-Term Trading Live with Oscar. Good evening, traders. My name is Oscar Carboni. I have come live out of the pits on Wall Street, where I learned a great deal of tips, tricks, and techniques over a good 25 years. And a lot of these old pros taught me some great things to teach you traders on how to follow markets. I'm talking about tricks, tips, and techniques to help you analyze charts, which should in turn make you a better analyst. And if you're a better analyst, that should make you a better trader. As we know, futures trading is extremely risky and can cause substantial financial loss if you do not have risk capital to lose, if you do not recognize that a stop is your best friend, and if you do not place stops first, you shouldn't be trading the futures market. We know trading futures is not suitable for every trading account. So, for you cowboys out there that are listening, rock and roll and let's go. This video is being filmed on Thursday night for Trading Friday. That's March 2nd, 2012. Traders, what is on the board? First thing is there is a green OMNI on the board, and next to that green OMNI says soybeans, and then U.S. indices has a question mark. Now, we're certainly still looking to buy dips in U.S. indices, but we want you to recognize something. Last night I spent a lot of time doing analysis on a video for you called March Madness. Traders, do not discount March Madness. This is only March 2nd that we're doing this video for. So we didn't have a pullback March 1st. The evidence I showed you in that video last night showed us this. If you go back to March of 2000 even, you will have a downward spiral projection in March of 2000. If you look at 2001, 2, 3, 4, 2005, 2006, 2007, 2008, 2009, every one of those started the month of March off on the downside. You look at 2010, it was an anomaly. You went up. Then comes 2011, we go right back down during March. That is March Madness. What else is going on out there? Crude oil has just traded above $110 a barrel. Traders, it was $104.80 a day and a half ago. It went from 104.80 to 110.55 in basically a 24-hour period. It can easily go from 110 to 115 in the next 24-hour period, and once crude oil gets to that mark, you will see the S&P start to come off. Maybe the March Madness will be brought to us by the crude spiraling. It sure did spiral, or I should say spike higher on Thursday. So, we are cautious buyers of dips in U.S. indices, and we like the soybeans, traders. Soybeans looking strong. If you like the analysis that is in this video that I'm going to show you in just a couple of moments, come on down to livewithoscar.com. Remember that these videos are for analysis for trading the next day unless it's a longer term video. Tonight's video being filmed on Thursday night is for trading on Friday. Traders, we like the beans, we like to buy dips and indices, but we know there's the March Madness, which makes us apprehensive. So if we buy dips in the emini S&P, we will be cautious. We will make sure that it's a deep dip before we get in, and we'll probably get out pretty quickly because March Madness is certainly upon us, and until we get out of the month of March, or at least the first 2 weeks in the month of March, we need to keep March Madness in mind. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart you were looking at is the E-mini S&P daily bar chart. This is the continuous bar chart for the daily E-mini S&P. You are looking at the 200 bar moving average. What I want to show you is that overall, larger picture, we sure have been in one big bullish trend for the last couple of years. But we do have March Madness to worry about, absolutely, unequivocally. However, on Thursday, we got above previous highs or contract highs in the S&P. This red line, which is now becoming black, represents contract highs. We actually got a little bit above it on Thursday, and looks like it wants to go above it Thursday night into Friday. So until March Madness shows itself, we will buy dips in the emini S&P. Let's look at another chart here, traders. These charts are looking pretty good. Next chart on the board is going to be your NASDAQ. Traders, the NASDAQ, this spot right here was previous highs. I mean, wow, look at this. This was previous highs. We have gotten above previous highs big time and are sitting right up here now. That's the live bar for Thursday night. So you just can't sell this market. You got to buy pullbacks even with March Madness looming, unless the market starts to really show us March Madness is in full bloom and starts to break. So for now, I am going to look to buy the U.S. indices on dips for Friday. We will take that one moment at a time. Traders, the soybean market daily bar chart. This is your 200 bar moving average. Ever since soybeans got above it, it's looking really, really strong. Look at the breakout above the 200. Rally bar, third rally bar. Thursday had a little bit of a testing area. It pulled back a little, backfilled, rallied all the way back towards the highs. You gotta like soybeans for Friday on the daily bar. Then if we go look at the weekly bar, I think you'll like that. Take a look at this weekly bar. Traders, the soybeans weekly bar chart. Look at the 200 bar moving average. It caps off this inverted head and shoulders. Left shoulder, head below the left shoulder, right shoulder. 200 bar average comes in right there. And boom, we start to blow out. The projection is still higher for the soybeans. So the daily and weekly soybeans looks pretty good here. Take a look at your soybean chart. Tell me what you think. So traders, you've seen the charts. There's my technical argument for why the soybeans has a green OMNI. The indices, green OMNI, but with some caution. And do not discount March Madness, because on Thursday, crude topped 110 a barrel. If it starts to make a move up on Friday, March Madness is likely going to materialize next week. Traders, come meet me at my site, livewithoscar.com. Come to my free trading rooms. Don't trade alone. I'll see you there. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Yeah. Video number 833. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.